Today is Monday, December the 16th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Mark Bowman, ADMIS Senior Global Market Analyst. Starting with the grains this morning, Mark, with the holiday season upon us here, what do you see driving agricultural prices through year end?
Well, I think first and foremost still will be South American weather. Right now, conditions across Brazil are quite favorable. Moisture levels that were critically low as we hit the planting season have largely been restored, and the prospects for record production and yields grow stronger pretty much every week, particularly for the soybeans. Conditions in Argentina mostly favorable there as well. However, rains across some of these southern growing regions have been a little bit more hit or miss lately. There are several chances for rain over the next week to 10 days. However, it does look like that's going to primarily be over the central and northern growing locations. So we could be on alert for some dry pockets showing up and some crop stress across the south. However, at this point, I still suspect that a combination of the two countries, we will see record production this growing season. Too early yet to know about the corn, as they've just started. They will start to plant their second corn crop in Brazil once the soybean harvest starts early next year. And again, other things to watch. We'll continue to monitor usage figures here as we get into the year end, and that's expected to remain strong for corn. Global demand for beans will start to shift to South American origin early next year with the arrival of their harvest. And then wheat, we're looking to see a big slowdown in the amount of grain moving out of the Black Sea region with lower production from both Russia and Ukraine this growing season. That demand will shift to the southern hemisphere and some of that to the U.S. as well. And of course, we'll just continue to monitor indications from the incoming Trump administration over a number of issues really that will impact agriculture moving forward.
And Mark, we're also about a month or so ahead of Inauguration Day. What do you feel will be the biggest potential changes in agriculture under Trump's second administration?
Well, I don't think the threat of or actual use of tariffs will be as big of a bearish feature in the soy complex as it was back in 2018 and 19 when soybean prices dipped below $8 for the last time. Prices continue to hold very close to that $10 level on soybeans despite favorable weather in South America and the threat of tariffs now really being present now for months. China's economy is in much weaker shape than it was 5 or 6 years ago, which I think may persuade them to be better trade partners with the U.S. to avoid these kind of tit-for-tat type tariffs or a full-blown trade war. Also, I think higher import tariffs on used cooking oil from China will enable U.S. bean oil to be more attractive in the production of biofuels. Recently, a group of U.S. lawmakers also urged the U.S. EPA to take a closer look at how they verify the authenticity of used cooking oil imports to make sure that they're not being blended with virgin palm oil to take advantage of the U.S. tax credits. Hanging in the balance, however, is still the question of the $1 per gallon tax credit on biodiesel and renewable diesel production. That expires at year end. And also the Trump administration has vowed to end tax credits for the purchase of EVs. So I think that would support gasoline and ethanol consumption. So a lot of moving parts and a lot of uncertainty as we look forward into 2025.
A lot to watch.
Indeed.
Mark Bowman, let's talk a little bit about the softs a bit. Where does Brazilian sugar production stand?
So we had a Unica report last week. That's their bi-monthly report on Brazilian center-south production. And it showed the second half of November production was actually increased after a sharp decline in the first half. And this caught the market by surprise. Production was 1.084 million tons for the second half of November. That's down from 1.409 million a year ago, but up from 901,000 in the first half of the month. Now, that first half November number was unusually low. It showed production down 59% from a year ago. And while kind of expected to see a decline, it was a big decline. So it's not that big of a surprise that it bounced back. Cumulative production now, though, 3.7% behind a year ago. The extreme dry weather earlier this year, starting to come home to roost. And we also, we've had the rainy season start up there and bring much needed rain to center south Brazil, but that could also bring the end to the harvest for the current crop. So kind of mixed. We're looking for production to continue to slow down. A bit of a shock last week when it actually came up, but that came from a low number.
And in the cocoa market, Mark, how is the West African cocoa crop shaping up?
So there is a great deal of concern that this year's crop will not be enough to offset the 3 years we've had of deficits, production deficits. Now, last year, the crop was pretty much a disaster. They had too much rain in the summer of 2023, and then extremely dry conditions developed last winter months and spring months due to El Nino. Now we've had a pretty good season coming along, but now the drier trend over the last month or so has raised concerns that production is going to slow down very quickly, as it does this time of year, but at a fast pace. They also have the Harmattan winds coming down from the Sahara Desert this time of year, and they're expected to make things drier over the next week to 10 days. So far, Ivory Coast port arrivals still running ahead of a year ago, but behind average, and they are coming off from their seasonal peak, which is in November. A couple other factors to concern ourselves for the market in general, and that is ICE exchange stocks are they're down to 1.4 million tons, which is the lowest since February 2004.
Lastly, Mark, how about a quick update on the Brazilian coffee crop? Any relief coming for coffee prices?
Yes, the market reached a new all-time high last Monday after Wkly put the upcoming crop, the 2025 crop, at only 34.4 million bags. But as the week progressed, we saw a setback because of kind of a revision of or re-looking at, well, is this believable? Is this an extreme? Because other forecasts still holding in the 38 to 42 million. The big question is whether the upcoming crop in 2025, how much was it damaged by Brazil's drought last year? It's a long-term situation, and there have been anecdotal reports of poor cherry development after good rains. Brazil's sales are already 79% of the expected output versus 69% at this point last year. This is for the 24-25 crop. And with the real falling to historic lows in November, it should have increased the pressure on growers to sell. But with them sold that much already, it may not be as dramatic as other times.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.